Good morning. I wanted to make hopefully a very short video on how I draw out my IPDA data ranges. It's nothing new. It's something ICT himself has taught, and I could link a few videos in the description of this one pointing out to where he teaches it, or just watch the entire core content series because he goes deep into them in the core content playlist. But the first thing I do is whenever it's a new month, so let's go back to the 1st of November. So whenever it's a new month, on whatever your asset class is, whatever pair you're choosing or trading or wanting to analyze or back test or forward test, whenever it's a new month, I draw out a vertical line on the first trading day, which on this day was a Wednesday, so it is a trading day. And from here I use the measuring tool from TradingView, which is you can just hold shift, but I'm not gonna need to do that because I'll just click on it once, and I'm going to use shortcuts to do this. So I measure from the first day, which is the 1st of November, and I look to see, as you can see there on this blue dialog box, it shows 1 bars, 2 bars, 3 bars, 4, 5, like that. So we're going to count forward by 20 bars, in other words 20 days. So there, when it's at 20 days, I use the shortcut key on my keyboard, which is Alt plus V. So Alt and V to place a vertical line there. So instead of having to click on the vertical line tool on TradingView all the time, I can just Alt V to place a vertical line. So I do the same without clicking anything on my mouse. That's why I say I only use the measuring tool once and can use that to help. So then we count back by 20 bars again. In this case, it's gonna be the negative direction, so it'll be showing minus 20 right there. So when we're there, Alt V, we continue until we go to minus 40, which is right there, Alt V, and then lastly we continue till minus 60, which is right there, Alt V. So now we can click away and get rid of this measuring tool. We don't need it. And then from here, the very next thing that I draw out, well, obviously assuming that the month has opened, the first candle is printed, the very next thing I draw out is the opening price for the whole month. So that's the opening price. This is a bearish candle. It's a white candle, I know, but it's a bearish candle, and that's the opening price for the month. That's literally the first price we print out for the month. I label that as my EQ level. You can label it as whatever you want to label it as, but that's the opening price for the month. The next thing I do from here is I label the highest, I delineate the highest high and the lowest low per session. In this case, each session is the 20 days high, 20 days high, 20 days low, 40 days high, 40 days low, 60 days high, 60 days low. But let me draw it out in price and time to make it more visible. So that's the lowest point. We can agree that between this 4th of October till the 1st of November, we can agree that this is the lowest point of the month. In the same fashion, I hope we can also both agree that this is the highest candle for that same period. So in other words, we have this. We have the highest point and the lowest point of the last 20 days. And we can then do that, and personally this is how I like labeling it. Some people don't even bother labeling their lines. They'll just write with the text tool something like that, and then type the 20 days low 20 days or something like that, so they know that this is the high and low. They don't have to label the actual thing. I prefer labeling mine. It's just 100% preference, nothing to do with rules or anything. So I label my 20 days high and my 20 days low. The next thing I do is for the 40 days. We can also agree that that's the highest point over there. That's the 40 days high, and this is the 40 days low right there, the lowest point of our 40 days low. Let's do the same with the 60 days high. Draw it out in time. And our 60 days low right there. The reason I draw this out in time is purely because even though we have already swept these highs and lows, with the way the algorithm works, it has tendencies of drawing towards those old lows and those old highs. So now that we've gotten our complete IPDA data range, we can see that right there we have the 60 days high, right? It has been kept as we have delineated it, and then here on the 21st of September we can clearly see that we've finally raided that 60 days high. We've raided it there, but it doesn't mean that we abandon it, because it can be used as a draw on liquidity or a significant level that price may respect in the future. For example, here we have this 40 days low, drawing it out in time. Even though it's been raided at this point on the 13th of October, we still find price coming back and using it as some measure of support without even getting to this other block. Use it as some measure of support to continue pushing higher. So these highs and lows can be used as PDRAs, because they are PDRAs from the PDRA matrix that ICT teaches for any future move. Now, how do I use the IPDA data range? I basically buy above, sell above and buy below. This is our equilibrium level, our opening price, our fair value. Anything above this blue line, I look for sells. Anything below this blue line, I look for buys. Of course, it's not just the case all the time. Sometimes you may be forced to sell in a discount, which is below the blue line. Sometimes you may be forced to buy in a premium, which is above the blue line. But it's in a general sense how I use this IPDA data range. So let's see how price prints out the next few days. We can see we've traded above the blue line, and right now mentally I'd be looking to sell, because we did not only trade above the blue line, we also took the 20 days high. So we've taken liquidity. I'll possibly be looking for a lower time frame or a daily chart change in direction to sell this off. But let's see how price plays out. We've taken another high and finally taken a swing low. We finally took this swing low. So I'll look for entries from here. Maybe this fair value gap that's probably going to form here. Okay, it did not form, but we now tapped into this other block, which has a tiny fair value gap there as well. This is not a trade review video of any kind. It's just a general idea what I would have done, and we can see price just falls off from there. So anything above the blue line, look for sells. Anything below, look for buys from a general perspective. And let's see if we take the 20 days low eventually. And we do right there. Yes, it is a new month. It's December at that point, but we eventually do get to the 20 days low. So this is a general sense of how I use IPDA data ranges. Stay safe, good luck, and good trading.